Buddy, thank you for being here. My name's John Gergley. I'm a business coach at CVOEO, one of two, and I've been doing this work for 7 years now. I'm retired from a career in business. I work part-time, 2 days a week, and for some reason volunteer talk for this class on business taxes. I know this is a really it's a question that comes up all the time with my clients, and so I hope I can help shed some light on this important topic for you today. Uh, I will, and I'm going to share my screen in a minute and have a presentation that we'll go through. And in there, there's a slide. I have a disclaimer because I just want to make it clear. I'm not a certified tax preparer. I'm not a certified financial advisor. So I'm not going to offer, I want to stay away from offering specific advice to anybody about their personal tax situation. And so the goal today is to really just give you some basic information about the business taxes that apply to your business. And being a CVOEO client, my expectation is that you fit into you are either a sole proprietor or a single member LLC. And therefore the tax reporting is driven by that business structure. And it's probably a lot more straightforward than you realize. So with that, I'll share my screen and get into the slides. And before we do though, just raise your hands for those of you on the screen. Do you already own a business and are you registered with the state of Vermont as a business? Okay. Hi, Adam. And are you all single member LLCs or sole proprietors?
Well, I'm a sole proprietor now, and I have a DBA with the state, but I don't have my business registered as such.
Okay, that's fine. Okay, good. All right, I'm going to share my screen. And if you would hold your questions, I'm going to pause now and again and ask you if you have questions. You can either jot them down in the chat or just save them, and I'll try to get to all of them. If I feel not qualified to answer your question, I will certainly tell you. Okay. So here we go. So today we're going to talk about, like I said, some basic things, why we pay taxes, the types of taxes that there are, how the organizational structure of a business affects how you report your taxes, in other words, what form you use. We're going to talk about how to track your expenses and revenues and what to track. And then we're going to get into specifics about Schedule C, because that's a form that if you are a sole proprietor or a single member LLC, this is the form you will be filing along with your normal 1040. And then we're going to talk about some tax reporting tools and methods. Very important topic today. We're going to talk about the owner's draw and self-employment tax. And at the end, I just want to touch on state sales tax reporting, because for some of you who sell a product, a tangible product, that's an important part of tax reporting. I mentioned this disclaimer. I'm going to put it here in writing so you can see it. I just want to make it very clear. I'm not a CPA. I'm not a professional tax preparer. I'm not a certified financial advisor. But I've had a lot of experience in business finance and taxes, so I know a bit about this. So today I want to focus really on helping you with some basic understanding of business taxes and how they relate specifically to micro businesses. And hopefully by the end of this hour and a half or 2 hours, your questions will be answered and there'll be less sort of mystery about this topic. But I will also say, when in doubt, seek the advice from a qualified tax expert. And also, we're going to talk about some resources that you can seek, you can look at yourself, and the IRS.gov being one of them. Great resources there. So you've probably heard this, but Ben Franklin supposedly said this statement is attributed to him, that after the Constitution was established, he said it has the appearance that promises permanency, but in this world, nothing can be said to be certain except death and taxes. And I'm sure you've all heard this before, but I think people somehow think of death and taxes with the same dread, but you shouldn't have to feel that. So let's just start quickly. We're not going to dwell on this. Why we even pay taxes? People grumble about this, and we all do, I think. We pay taxes because it ensures we have a functioning society. Taxes pay for public infrastructure such as schools, roads, airports, public land, recreational land, social programs, Social Security, Medicare, Medicaid, SNAP, Three Squares, housing assistance, and of course, the national security, airport security, military, and so on. So taxes, as you probably know, many countries, Scandinavian countries in particular, people pay 60% tax rate. And for that, everything in their lives is taken care of. So taxes are not necessarily a bad thing. It all depends on how that money gets spent and how it serves the public. There are different types of taxes, and maybe we forget how many there really are, but I've just listed a few. There's personal income tax, business corporate tax, sales use tax, Social Security and Medicare tax, self-employment tax, there's fuel tax, tolls, surcharges, and there are probably more. I put a couple of asterisks in here because personal income tax, sales use tax, and self-employment tax are things that we're going to touch on today and going to be the focus of our conversation. So business structure, how does that affect the types of taxes you pay and the tax form that you use? And the IRS looks at the type of business entity or structure that you are. Do you have shareholders, investors, partners, employees? And you've probably heard of these different types of businesses, S Corp, C Corp, and of course, sole proprietor. There are single member LLCs, multiple member LLCs. For the most part, I think you are one of these. And again, as I said, this is what we will focus on today. These other forms of these structures, you can elect to be an S Corp as your business grows. And there are some advantages of being an S Corp in that at that point, you have multiple employees, you yourself are an employee, and the business pays taxes, and you only pay tax on what you earn from a salary. And so as your business grows and gets significantly larger, the cutoff is typically $80,000 in profit before it's advised that you switch to an S Corp. But there can be some advantages at that point. But these other forms are more complex. They require, particularly C Corp, you have to be incorporated, you need lawyers, accountants, and it's obviously more difficult to manage. But just be aware, as things change with your business, your reporting entity, your structure may change as well. Any questions so far? Okay.
I have a quick question.
Yes.
As I've, been doing a lot of research on various, different tax entities and such, is there's not, I mean, getting the sense that it really depends on very specifics of your business, whether there's a real tax, overall tax benefit, in terms of how much tax you actually pay based on different structures. It's not like a general rule of thumb, right? Or is it?
So
Um,
ask the question again, please. What is the question?
is there a general rule of thumb for what business entity
Yes,
for how much tax you're going to end up paying overall based on your business entity, or is that going to depend a lot on the particulars of your business?
that the amount of tax you pay is a combination of the structure and the profitability of the business.
Mm-hmm.
And I'm gonna show you a few examples later on that I think will help clarify that a little bit.
Okay.
John,
Yes,
what is the difference between sole proprietor and single member LLC?
we're gonna get into that
Oh, okay. Yep.
in a second.
Thanks.
Okay. Excuse me, somebody's trying to call me after. And then, okay. I say here it's not as complicated as it feels, but this can be complicated and it does feel complicated. But as a single member LLC or as a sole proprietor, the IRS treats those identically for tax reporting purposes. And they call the single member LLC a disregarded tax entity. So what that means is in both cases, you are the tax filer, not your business. And I think this is a really important point to understand. People think that their business reports taxes. When you are one of these and these types of businesses, that's not the case. You are the tax reporter in both cases. And in both cases, you use the standard 1040 and the Schedule C, which is a business form. And we're gonna get into that in more detail. You can have employees as a LLC, single member LLC. You can have a spouse as a partner and still use the Schedule C, but then you each do your own Schedule C. Now, as far as the difference, the LLC stands for Limited Liability Company. That is not an incorporated entity. It's simply registered with the state as limited liability, and it offers some protection of your personal assets in the event of a legal action by a customer or somebody else. But that's really the only difference. Okay?
Thank you.
Yep. So as I said, in both cases, the tax reporting is relatively simple. What this means is that your business income, which is your profit, flows from the Schedule C where business information is entered to your 1040 and there's a separate line on the 1040 that shows Schedule C income, and that's added to any additional income that you have from other sources. Perhaps you have a part-time job or a full-time job, whatever that may be. All of that income shows up on the 1040, and your net income tax will then be calculated. The important thing is that the Schedule C is where you itemize your business revenue and your related business expenses. And that Schedule C will show what your business net income is, which is not necessarily your taxable income, and we'll get into that. And again, I want to make this point clear. You are the tax reporting entity, not your business. If your LLC has other members, then the IRS considers that to be a partnership, and then you have to file a different form. It's a 1065, I think, and that things become more complicated. Single member LLC with employees, if you have employees, then you file your Schedule C using your EIN. Otherwise, you use your Social Security number. As I mentioned earlier, you can convert to an S Corp status later. And in that case, the business is the taxpayer. And at that point, there may be shareholders or partners, and that whole sharing of profits and reporting of income becomes more complicated, use of what they call K-1 forms. And at that point, I would say, talk to a qualified accountant. I once was a treasurer of a small business that I was part owner in, and filed those taxes, and it's not easy. So calculating taxable income, and this is really we're going to now get into what goes into the Schedule C. And I want to just touch on a few terms, make sure that we're all grounded and rooted in what these terms mean. So the top line, as is often referred to, is your revenue. And the revenue is money that you receive from your customers in return for the goods or services that you sell them. Nothing more, nothing less. You sell something for $10, you have $10 in revenue. The next item to report, if appropriate to you, if you sell a tangible product that you produce, so flowers, for example, you have a cost of goods sold. This probably does not apply to people who are providing a service. Say you're doing massage, although I know I have a massage client and she sells herbs and candles. So she does have cost of goods sold in that case, in addition to massage revenue. And the reason that cost of goods sold is important, and this is when it starts to get a little more complicated. If you spend money on inventory for the things that you make, as a small business person, it may not make that much difference. But if you buy $1,000 worth of material from which you're making a product, and you're only selling $300 of that to produce revenue, and the other $700 is sitting on a shelf, that's inventory. And you will have to then track things a little differently. So just be mindful of that. Otherwise, what happens is you take your revenue, minus your cost of goods sold, and that yields what they call gross profit or gross margin. And that gross profit pays for all your other expenses, such as rent, mileage, employee wages if you have them, phone, marketing expense, and so on. Then after you deduct all your operating expenses, and by the way, somebody had asked about write-offs. Well, these are the write-offs, right? I mean, you deduct your expenses. That's what a write-off is, essentially. You deduct legitimate operating expenses from your revenue, and the result is your operating profit or your net income. And that net income, which is the gross profit minus your operating expenses, this is the taxable income that goes onto your 1040. Okay, any questions about this? And we're gonna stay on some of these terms for a bit.
I have a question.
Yeah.
So cost of goods sold, this would be just materials that you're purchasing. It's because you have employee wages are an operating expense. This would be just materials that go through your
So if you
produce an item.
Correct. So if you sell, in a class that I had taught previously on business planning, I had an example of someone who wanted to make cookies and figured out that, 5 pounds of flour and X pounds of sugar may yield so many cookies, and a cookie sells for
Sure.
$5, and he figures out on average every cookie that he makes costs $2. And he may not have consumed all of those raw materials, but he sold 10 cookies. He earned $50, and those 10 cookies cost him $20 to make. So the 50 minus the 20, there's $30 of gross profit, but he still has more material left over to make more cookies. So he did not write off the entire cost of the purchase of his inventory. He only accounted for the cost of what he sold. So if you
So
make
inventory is only written off as it's sold. Is that the idea?
that's essentially exactly right. That's correct. And that's why if you do have inventory, it's really important to track that, because if you accumulate stuff that's not being converted into saleable product, that's cash sitting on a shelf doing nothing. And small businesses, it's not typically a problem, but as you grow, I mean, it's on the other hand, small businesses tend to be really tight with cash, so it's easy to get in trouble by buying too much stuff that's not being converted to saleable product. But that's it. Yep. And
I have a question about a phone as a operating expense. I have to buy a new phone, but it's for my personal and business. So I wasn't sure how much percentage should I?
well, the IRS allows for what they call reasonable expenses, and you are allowed to deduct the portion of an asset that you use for yourself for your business. So if you estimate that your phone 60% of the time you're using it for business, you can deduct 60%. You can allocate 60% of those costs to your business.
Oh, okay, good to know.
Okay.
Thank you.
And mileage is here. I'm going to talk more about mileage and home office expense, because those are two things that come up all the time, and I think there's some misconceptions about those. So I'll get to those in a minute.
I have a question, John, about cost
Yes.
of goods. So what if you're doing stuff virtually? Like for me, I do a monthly art show. So what I'm selling is, how many pieces you put in the show, but it's not costing me anything other than my time and the cost of my website, which that will be under operating expenses, the
Correct.
website, correct? Okay.
Right, but you have a cost of materials in that piece of art, right? I mean, you bought canvases, you bought.
No. I'm talking about for art dames. I have a monthly show where I will charge, it's relatively inexpensive. Like people will enter 2 art pieces. They pay me for how many
Oh.
pieces they enter. And then I have a show. There's also a People's Choice Award. So I'm not producing anything physical.
Okay. Then for all intents and purposes, you have no cost of goods sold.
Okay, that's what I thought. I just
Yeah.
wanted to check. Okay.
So so for example, for a service provider of some sort, essentially 100% of your revenue goes to gross profit.
Okay.
Wouldn't you also calculate the any like recurring fees or subscriptions for internet, the internet you're using, and like the actual internet and also the computer?
Yep. So those are operating expenses. Computer equipment. If you buy a new computer, and computers are fairly cheap now, you write those off, you take that entire expense in the year you purchased it and show it as as a business expense. If 100% of it is used for the business. It used to be, there are some assets, if you buy an expensive machine, you have some process that you're making something, you buy a machine for $1,200, two or three, more, a significant amount of money, then there are rules of depreciation where you write off an asset over its useful life. And that's when one of your operating expenses would be depreciation expense. And if that's something that you have to do, we can talk about that offline, but that's a little more complicated, but that's how you would handle an expensive asset. The rules have and there are assets, you can look them up in the IRS website. There are rules about how assets get depreciated, over what types of assets, over how many years. So if some machines have useful lives of 10, 15, 20 years. But now we're talking big numbers. These are not likely to be things that anybody in this call is dealing with. But if you have any questions about that, please contact me afterwards. We can talk about it.
John, you might have talked about it with Adam. I missed that question. Had to help my son. But did you talk about the thing with cost of goods if you have the thing you mentioned about inventory? Because I make greeting cards and I buy in very large quantities to save money. And I've never done the inventory thing you're talking about.
Okay.
What do you have to? I'm hoping I don't have to because it sounds like annoying, but
well. And maybe we can touch base offline, but what are your purchase values roughly?
Well, I just bought envelopes for like $2,500. So I bought like 20,000 envelopes.
Okay, and then over how long a period of time do you consume those?
2 to 5 years.
Oh, all right.
Yeah, and that's about, I don't like to order much, so that's about as frequent as I order cards and envelopes. I do them separately.
Yeah, can you call me after we can talk about
Sure.
it?
Yeah.
Okay.
Thank you.
All right.
My question about this, is because everyone has such specific needs or questions pertaining to what they're doing. Do you recommend that every business owner has like a tax, like a one person that they do their annual taxes with, or can they just go to anybody who offers that service? Like, should they have someone who's like maybe on payroll?
Oh, no. You don't need anybody to pay. I mean, you could pay, you can hire a tax preparer. Ideally, you go to the same one. There are great online tax packages now that you can do this yourself. TurboTax is some wonderful tax preparation tools. If your income is low enough, you get some of these tools for free. The IRS requires that you get them for free. And again, I mean, there's a rule in accounting called materiality, and generally speaking, you are a very small business, so the numbers involved are still relatively small, and they may feel relatively big to you, but there are simple ways of handling this, and you should not be paying anybody a lot of money to help you because you shouldn't have to.
Okay. So you're recommending that you need to learn how to calculate your taxable income on your own.
Well,
And
I'm gonna show you how to do that, and if you still feel uncomfortable, then you should definitely talk to a tax preparer. And but that's not so that's when you said on payroll. I don't like the sound of that, but you might pay somebody $150 a year to prepare your taxes, and if that gives you comfort, then you should do it. Okay?
Okay.
And again, if you want to, if you can explain to me offline a little more about your particular circumstances, I can guide you more appropriately. Be happy to do that. Okay?
I have a question about cost of goods. I have a small business and I usually sell everything at the end of the year. But last year, 2023, I have some inventory left over, but I'm gonna use them this year. So I'm just wondering if it's okay continue as not calculate inventory.
Yeah, it probably is. And that's what I'm
Okay.
saying. I mean, if things turn over fairly fast,
Right.
it doesn't matter.
Okay. Okay, great. Thanks.
Yeah, and it's really up to you. I mean, if you notice that you're accumulating a lot of things that aren't turning over quickly, being sold quickly, it may be to your benefit.
Mhm.
I mean, the IRS really doesn't care. It's really to your benefit because if you're reporting that you spent, well, you're over reporting your expenses. If you say I bought $2,500 worth of envelopes, but you're then not using them over several years. But if that's relatively small compared to your revenue, it's not a big deal.
Okay, great. Thank you.
My question about like itemizing your business expenses, I think from what my understanding of um business write-offs, especially starting a new business, is the IRS like allows you to write off up to $6,500 worth of expenses. Is that something that you do in your first year? Like if you've spent more than $6,500 to start your business, do you do it then, or do you? I'm sorry.
I'm not aware of the $6,500. I've never heard that, but
Startup costs, like for we're talking about like taxable income. So I thought that when you said you're itemizing your business expenses, that includes startup costs, like the cost that it of how much it costs you to start.
well, it depends on what those costs are. I mean, you have to have revenue to write things off, right? You can't, I mean, you have to,
Mhm.
what kinds of expenses are you talking about?
Just any expense that's related to starting a business.
Okay, okay, so if you spend $125 to register your business with the state, for example, that's a legitimate business expense.
Mm-hmm. Yeah, but then for other businesses, I don't want to give like make it specific, but I'm just saying like if you're going to start a business, for example, and you had to make a large purchase, maybe a $25,000 vehicle specifically for the
Oh,
business, and you are allowed to, this is what I think. You're saying you have never heard of it, but I'm assuming that the IRS allows you to write off up to $6,500 worth of the cost that it cost you to
well,
begin.
okay. It depends on what it is. If a $25,000 vehicle has a useful life of, I don't know what the IRS rules present, probably 6 or 7 years. So you would be required to depreciate that vehicle over that period of time. And you would take a portion of that $25,000 each year as a depreciation expense. That's the portion you would write off each year. So it really depends on
I
what
like
the expense is.
I like to ask something. If you wanted to get started in a business, how would you get started? Like, what is the first thing that you do if you
Oh,
want to
well,
get started?
you should call me, Josiah. Josiah, that's a whole different topic.
How do
Okay.
I call you?
My contact information is here at the end, and We'll make sure you have it.
Okay, thank you.
Yeah. So these are great questions, and I think if you have, I'm not sure who was asking me the questions about the $6,500, but again, if you want to call me later, we should talk about this a little more. Okay? Okay, so next I want to touch on is salary versus owner's draw, and this is a really important one. A lot of people, sole proprietors, single member LLC folks, want to know how do they pay themselves. As a sole proprietor or a single member, you cannot pay yourself as an employee. You are allowed to take a draw during the year as you wish and as your business can afford. So it really is all dependent on how much excess cash your business is producing. And the important thing is that no matter how much you draw, zero or a lot, your business is taxed on all its profits, all those paper profits for the year, because the money you draw out is not an expense. So it's really important to realize that the entire net income that you report or that your business shows on its Schedule C is considered taxable. And we're going to hold your questions on this because I'm going to explain more about this. And the really critical aspect of this is that this entire net income then drives what is called self-employment tax. If you've worked for anybody previously, you probably received a W-2. And on that W-2, there's always a portion of the amount of money that you pay into the government for Social Security and Medicare. It's called FICA. You pay half as an employee and the employer pays half. But if you are self-employed and your profit, your net income exceeds $400, you are required to pay the entire self-employment tax, which is 15.3% of your net income, of the business net income. And that's the, again, I'll have another example, but it's the difference between that gross profit and your operating expenses. So as a self-employed person, you pay the entire amount. However, there is a 50% of that is tax deductible, and I'll show you how that works. But don't confuse the self-employment tax with income tax. They're two different things. And it's real important, by the way, I think I mentioned this later, that you should pay this, you should be paying an estimated self-employment tax quarterly. There is the IRS has a place where you can go and open your own personal account. You can make this payment online there. They have tools that help you estimate what it is. The important thing is to pay something. Because depending on how well your business is doing, it could be a sizable amount of money. And so 15.3% can add up quickly. So I have a little example here that I want to share with you about how.
John, I have a quick question about that. You said you're saying quarterly payments for self-employment tax. I make quarterly payments based on my overall tax liability that includes self-employment.
Yeah,
that's what you're talking about.
That's correct. So yes,
okay.
Thank you for that. Yep. So how do you calculate your taxable income? And I just put some numbers on a little spreadsheet like this, and if you don't use a little spreadsheet like this, please consider doing so. You just month by month track your revenue at the top. These numbers are all fictitious, but in this particular example, this little business generated $31,000 in the year. This is a business that produced a product, so the cost of goods sold was $7,750, had a gross profit of $23,250. And you can see what expenses it incurred on a month-to-month basis and lost money the first few months, but by the end of the year, it generated $12,450 in net income. So this 12,450 is what the self-employment tax is based on. Okay, and this 12,450 also is the amount that carries over to your 1040 form. And just for a second, I don't know if you've ever seen one, but I just want to show you. I think I have it available here. A 1040, where did I put that? It's in here. No. Where'd it go? Okay. Can you see this? Here's what the Schedule C looks like. And it's fairly straightforward. It shows kind of the standard expenses we were talking about, advertising, car, truck expenses,
John,
depreciation.
I think you need to change which screen you're sharing.
Oh, are you not
If
seeing it? I
you-
apologize. Okay, thank you. Okay. Can you see this now?
Yes.
Yes.
Okay. So this is the Schedule C, and it's part of the Form 1040. I'm not going to go through the entire thing, but you can see here's where you would line one, your revenue, your cost of goods sold if you have it. Here's your gross profit. And then you report your expenses. Not every single one of these will apply to you, but you put in the amounts of money where they do apply. And down below on another page, there are other expenses if they were not included above. There's a whole big thing about your vehicle, which I will talk about a little bit more separately. But in short, basically what I want to say of the vehicle mileage is the IRS recommends the easiest way to account for vehicle expenses is to track your mileage that you drive for your business. Keep a log because that's what they require. And whatever that mileage is, you multiply by 65.5 cents, and that's your deduction plus any additional expenses you incur for parking and tolls, I think it is. But that 65.5 cents per mile is a number that the IRS has determined is the average cost per mile of owning and operating a vehicle. And they tend to increase that amount every year a little bit. So just be aware of that. It's a lot easier than itemizing the amount of actual expenses that you incurred on a vehicle and then separating that from personal usage and so on. So track that mileage and that's how you get your deduction. Okay, so this is what the form looks like. But how you gather this form, I'm going to go back to the other. Do you see my spreadsheet now, or do I have to change it again?
We see the tax form still.
Okay. Let's see. So I'm gonna go back to.
Do you ever feel nervous when filling out that tax form? Like I get nervous when I see that tax form because I always worry about like putting the wrong thing or like not putting the right stuff on something like that, like putting the right information down.
Well, that's why it's important to keep good records and using a little sheet like this, and you shouldn't have to worry about it. I mean, you do the best you can and you keep records as best you can and be as honest as you can. So I want to get into a couple of examples here, specific examples. I have several scenarios, but this tries to pull together how the self-employment tax and income tax come together. So in this case, we have a person, this is the $12,450 that I showed you before from my little spreadsheet. That would be my Schedule C net income, 12,450, you can see here. And there's the 15.3% on the 12,450, and it says my self-employment tax is $1,905. In this case, the only income I have this year is from my business. So that 12,450 is the only income. So that goes to my 1040, 12,450 is my income. And as a single filer, I get a deduction, standard deduction of $13,850. Now remember, that deduction has nothing to do with your business deduction. That's just a standard deduction the IRS gives every single tax filer. If you're married and you're filing jointly with a spouse, it's double. So at the end of the day, and then because I have I paid the 15.3%, I get to claim half of that as a deduction. So it shows my net taxable income is a loss. So I don't have to pay any income tax that year, but that self-employment tax is still due. That 1905 doesn't go away. So that's what you want to be aware of. So if you make that quarterly payment, if I'd made that quarterly payment during the year, it would have been $476 a quarter, roughly. So just be aware of that. So that's really important distinction between the income tax and the self-employment tax.
So in this scenario, you get no tax benefit from being able to deduct half of the self-employment tax because it's
exactly. Now, what I'm not sure of, I'm not positive if this loss can be carried forward to the next year. I think some of it can be, but I'm not 100% positive of that. But the main lesson here is that 1905 stays. Okay. So in the next, yes, go ahead.
Oh, what happens if you don't pay quarterly payment? You didn't think you made enough profit and you didn't pay? Do you get penalized?
Yeah, well, yes, when you file your tax return, the entire amount will be due and a small penalty will be applied, depending.
Oh, okay.
Yeah.
Okay, great. Thank you.
They won't put you in jail.
Okay, great.
They don't give you a penalty if you don't make like a ton of money, right? Because I didn't.
$400, that's the limit. You have to.
Oh, I've never paid quarterly taxes before. I didn't know that. Okay.
But do you pay? But you pay when you file your return annually?
Mm-hmm. Yeah. Yeah,
Okay.
usually it's like under 1,000, so I just pay it. I just save up for it.
Yeah, and you can do that. And the penalty, there's probably a small penalty. You're not even aware of it. And so you can do it that way. That's fine. If you're willing to, it's probably an extra, I don't know, $50, $60 or something. It's not
Okay, so the other option is I don't have to file my taxes quarterly. I just make payments towards what I think it might be. Like
correct.
So you guess, like you don't really know, but you're like, it's probably $2,000. I'll pay 500.
Exactly. And
Okay.
if you overpaid, you'll get it back.
Okay. Oh, you do. Okay. I think I'm going to do that from now on because it
Yeah.
is kind of stressful
Yeah.
to have to pay so much at once. I didn't know about this. Thank you.
Yep. So in scenario 2 here, same scenario in that I'm only filing, my only income is my business. But in this case, I had a really good year. My net income from my Schedule C was $20,000. So you can see my self-employment tax doubled almost from the last scenario. It's now over $3,000. I have $20,000 of 1040 income that went from my Schedule C. I get the standard deduction. I get the $1,500 self-employment tax deduction. So my net taxable income drops down to $4,620. And I assumed a 12% tax rate here. So my tax due is $554. I still owe the $3,060. So I owe the IRS $3,614. Okay. So even though I'm paying the 30, if I had made quarterly payments, I would have paid $904 each quarter, and that would have been that. But you see the difference here the difference here is that my income was large enough to take advantage of the standard deduction. And so I had net taxable income.
Does it really make a difference though? Because you're paying the other tax you didn't pay earlier, the self-employment tax or something. There was something in the other screen that you didn't have to pay. So I don't know, but I might have misunderstood it.
I did, okay, here's the first one. I did not pay any income tax in the first one because my net income was underwater.
Okay.
After I took the standard deduction, I didn't owe any tax, but I did owe the self-employment tax.
Okay.
But the self-employment tax was smaller because my net income was only $12,450. But because I was underwater, I could not take advantage of the 50% deduction for the self-employment tax.
Oh, I see. So they do kind of help you a little bit when you get past 13,000,
Yeah, yep,
14,000.
yep. So yeah, so if you that's right. So in this case, I was able to take the full $1,530 write down. 50% of this I could write down. This is scenario 2. This is where my net income was $20,000. Okay.
Are we gonna go through mileage? Because I did in another slide, I had some questions about that.
Yeah, we'll get to that in a few minutes.
I'll ask that question then.
I have one more scenario. And in this case, I'm back to what my business was only produced that 12,450 that I showed you, but I had net income. I had income from another source, and presumably from a W-2. So I had $20,000 from a part-time job, and so my total income was 30. Did I do this right? So, okay, so my self-employment tax is 1905 again. I have my standard deduction, and I'm able to use 50%. I can reduce the oops, I have a typo there. I can reduce 50% of my self-employment tax, the 952. So my net taxable income is $5,198, and I owe $624 if my tax rate was 12%. I don't know exactly, if it might be a little higher at that point. But I still had to pay the 1905. So in total that year, in this scenario, I had to pay $25.29. And
But
again,
that might include supposedly income from a job in which there was withholding, right?
probably,
So
I didn't show that. That's
Okay.
right. Yeah, that's a really fair point, that chances are there was some withholding there and for income tax, but the FICA tax that the employer paid has nothing to do with the self-employment tax that I owe on my business.
But your quarterly payments would be based on your Schedule C liabilities, not on your employment.
Correct.
Not including your employment. Then you'd have,
Correct. Yep.
So that means you would have to file quarterly taxes twice for your business and then for your
No,
other job where you're not getting withholding. taxes.
no. My other job where I earned the 20,000, I didn't reflect it here, but Chad, that's the income I received, but there probably is other withholding there. And if there was probably some income tax withheld, and so really my net out-of-pocket cost here might be less.
I'm asking if you didn't have the withholding, because if you're in it, this is if you had a 1040 income, and I'm asking if you didn't and you were a 1099 employee and you had to file your own.
Oh, well, this could have been that. This second income source could have been 1099.
So you would have to do it twice.
No.
I'm confused.
Why would you have to do it twice?
Because if you're a single member LLC, like I understand that the IRS is, for tax purposes, you're considered a sole proprietor. But if you are filing quarterly taxes for your business, and then you have a secondary source of income where you're an independent contractor and you're responsible for filing your own quarterly taxes, won't you have to do it twice? Like you'll have to do it for your business, and then you'll have to do it for this other revenue source.
No, because you're still filing only one 1040. You just have two different income sources.
Okay. So is there a benefit to being a single member LLC then? Instead of
Sole proprietor?
no, because it's the same thing for tax purposes, right? You'll still file
Yeah,
one tax return. If you're trying to separate your business from your personal.
but you don't necessarily want to, and it's simpler not to. I mean, why would you separate them? I mean, if you have a business, where in your scenario, where was the 1099 money coming? Who was paying that to you? For what reason?
I didn't want to give personal examples, but I'm asking in general. Like I am a 1099 employee. I have different sources of income, and I am starting a business with my partner, but then my partner also has an existing business. He's a single member LLC, but in our business that we're considered a partnership for tax purposes. So it's just like, for his his business, it's important to maintain that
Okay.
yeah.
So it sounds like, so you're forming a partnership. So that partnership that you form sounds to me, based on this information, that that partnership would file its own tax, but would issue to each partner a K1. So that K1 would show up in your 1040. So you personally would only file a single return. Maybe you should call me later.
Okay.
Sounds like you've got something going that's a little more complicated. Okay?
Okay.
All right.
I have a question. Can you
Yeah.
claim your self-employment tax as a business expense? Like,
This self-employment tax deduction?
no, the amount you pay, is that considered a business expense?
Um, no, it's not a business expense, but it's a deductible expense on your 1040.
Oh, okay, because I think I got credit because I paid taxes, and then the following year I got some credit when I was doing taxes. If you pay self-employment tax, do you get some sort of credit for the following year?
Maybe you overpaid.
Oh, I don't know, something happened. All right, thanks.
Yeah. Okay. Okay. I hope that helped clarify that. The key messages I want to get across, though, is that pay attention to that self-employment tax, and it is not the same as income tax. Okay, so common deductions. So we talked about the home office use comes up all the time. And the IRS has a very specific rule about this. You are not allowed to claim any more than 300 square feet of dedicated space in your home. It could be in a rental, it could be an apartment that you rent, or a condo or house. And the key here, dedicated space. So you cannot say, well, I do my business at my kitchen table, and therefore I'm going to claim my dining room. If that dining room is not, if that dining room is used only for your business, that's one thing. But if you remove your stuff at night and you have meals with your family, that's not dedicated space, and that is not an allowable deduction. And the write-off or the deduction you can take is $5 per square foot times whatever the square footage is, and it cannot exceed $1,500. Okay, so that's pretty straightforward. People don't like it, but that's what the IRS says.
Well, that's for the standard simple deduction for that. What if you're going off of, like, what if I have a whole different building that's a workshop for my carpentry business?
Oh, totally
that's a
different. Totally different. Yep.
Okay.
If you have a standalone workshop and you're paying rent and utilities on that, all legitimate deductible business expenses.
If I own that building, I mean, if this is a more complicated question, if I own that building, yeah, I can lease it. I can lease it. My business can lease it to me, and that becomes a business deduction. But then it becomes an income, personal income. Is it a wash at that point, or what is? I don't know.
Oh boy, I'm going to punt on that one.
Okay.
I apologize. That sounds, it strikes me as a little bit of gamesmanship. Do you have a mortgage on the building?
I'm building the building presently, so. Yeah.
Oh, okay, okay.
Yeah. Okay.
But you're probably incurring some expenses there then.
Oh, plenty. It's all building materials. Yeah.
Yeah. Well, what you're going to be able to do probably is when the building's done, you should be able to depreciate the building. You never depreciate land. If you own the land, you don't depreciate the land cost. But the building itself can be depreciated. So you can write that off over many years. And then
Yep.
once it's up and running, you'll have ongoing operating expenses, heat, light, power, repairs, those kind of things.
But if I also my office is in my home, though, that doesn't preclude me from taking the home office deduction, does it?
No, if it follows these rules, you can take that as well.
Okay.
Okay, so then personal vehicle use, I mentioned this earlier. The simplest way to account for the use of your vehicle for your business is to log your business miles and multiply by the IRS reimbursement rate, which is currently 65.5 cents. And that covers all the costs of vehicle ownership. The only additional expenses you're allowed to add are parking and tolls, and those you would need to. I mean, they say you need to be able to demonstrate, prove that you incurred these expenses, and you're supposed to keep receipts for up to 5 years and so on. But for the mileage, they just say that you need to keep a logbook. Okay.
I have a question about that. I've had just issues with the mileage thing. I got this app on my phone through QuickBooks. I had
Yeah.
one Mile IQ, and then I had a QuickBooks one because it was free, but it doesn't work well in Vermont, I guess. The Mile IQ worked better because we don't have service a lot. So what was happening is I had to swipe if it was personal or business. And I always do both whenever I do trips because I live in rural Vermont. So if I'm going to drive to Burlington, I'm going to shop and deliver orders. So I was just struggling with knowing what to do because I'd be like, well, I'm driving to Costco first. That's personal. So I'd swipe personal. And then I'd be like, well, now I'm delivering orders. So, I wanted to ask, like, the way I used to do it is I would just put the whole trip as business. But now with the app, it's different. And the way I used to do, I didn't even know if I was doing it right. I would just write the day I drove, where I drove, and then I would just put it into Google Maps, the mileage there and back, and then just enter that for that day and what I
Yeah.
did.
That's probably okay. I would think though that maybe if you're doing personal business as well as business, you would maybe cut it in half or something.
Okay, so that's kind of what was naturally happening with the app. So maybe I can just keep doing that. It just naturally did that. Like if
Yeah.
I went to the dentist first, it was personal, and then I went to the
Yeah.
store and came home, it was business, and it's kind of doing it on its own.
Yeah.
So maybe I'll do that because, yeah. And then can you use like Google Map mileage for a log, or do you have to use your?
Sure. Oh, sure. Yep.
Okay, because that was like a really simple way that I did it for a
Yep.
long time because I didn't drive that much, but now it's a little more involved,
Yep.
so I drive more. Okay, so that's fine if you do just write down what the Google mileage was.
Yep. Correct.
Okay, so either of those are okay. And
Yep.
then I had one of those little books in my car with the odometer, a handwritten thing, but I just found that so tedious.
No, an electronic log is fine. Any kind of electronic log.
Okay, so you can just have like a spreadsheet that says
Oh, yeah.
1524 drove here, there, and then I can just
Right.
type it into Google Maps and it says 97 miles and I can just enter 90. I don't need the odometer readings.
No.
Okay, and then do you need your odometer reading at the beginning of every year? Because I also me and my partner have 2 cars and 3 kids, so I don't always use the same car on my business because it depends where the kids are, or the car seats, or so I switch cars. So the odometer thing is a little tricky because they both have different readings.
No, you don't have to use that. You don't have to do that.
Okay, so I don't really need to say, oh, I used the blue car and this was the odometer, and then the gray car. I can just say, this is the total amount of mileage. I don't even know
Correct.
the odometer readings.
Correct. Yeah.
Okay, and the app is good because you can switch between cars. I liked that.
Yeah. Yep. That's fine.
Okay, thank you. I had a lot of questions about that. Thanks.
That's okay. Yep. Okay, unless there are other questions, I'm gonna go move on. Oh, and so just exactly what we're just talking about. Some of the tools for tracking. I mean, keep a simple spreadsheet, use a notebook for your financial transactions. I hope you realize especially if you do online banking, all your bank transactions are easily downloadable into a spreadsheet. It's a very simple way of separating the various transactions from your personal stuff, and it's a good way of keeping record of your business stuff. And ideally, you have a separate business checking account, so all your business transactions anyway are flowing through a separate account. But to build a spreadsheet like the one I showed earlier, something like this, if you download all those transactions from your bank monthly and do it regularly, it's very simple to keep track of things this way. But point is, do it regularly and be disciplined. And you really have to pay attention to the rules. I mean, if you want to be a business person, take time to learn the stuff that you need to know about. So I just want to touch a little bit on sales and use tax.
Can you go back to that other slide? I was writing it down.
Oh, sorry. Yeah.
You're just taking notes.
We probably can make these slides available to people, can we not, Sophia? I don't know.
Oh, that'd be great.
Yeah, I'll make sure to include these in the follow-up email.
Okay.
For business tracking, I use Wave, which is a free tool, and I link it to my business bank account. So literally it tracks all of my spending, all of my income, and all I have to do is sometimes tweak how they label it. And for free, it tracks all of my profits, my losses,
Oh, great.
income. So it's called Wave.
I'm not
And
familiar
it's
with that.
free.
Nice, great. Who's behind Wave? Do you know?
I'm not sure. One of my business advisors told me about it.
Okay,
But I can, I easily have reports for the end of the year. I have reports for whoever needs them at the tips of my fingers.
great.
I know at any given moment it, what my financial situation looks like. And it's really easy to keep on top of.
Okay, the only reason I ask is that, some of these apps are owned by the Elon Musks of the world, and so you just want to make sure that you're dealing with reputable, they're not spying on you or getting personal information about you. That's all. Just be careful.
All right, thanks.
Do you have any experience with QuickBooks or suggested or not?
I do actually. I used to use QuickBooks a lot in a former role that I had. I recently tried the QuickBooks Online version and didn't like it at all. I found it to be way too cumbersome, and I don't know. I've been in the computer business since the 1980s, and I found this new version of QuickBooks to be not very user friendly. So I might have to try it again, but I didn't like it.
Well, I tried it too, and I found it really I don't know, extra information and confusing. And then I discovered this little tab for QuickBooks Self-Employed that was really
Oh.
basic and just did the Schedule C form. And
Oh,
that's what
really?
it makes sense. And it's half the price. I think they just don't market it because they don't want people to pay less money. I don't know. So I wanted to
Good
ask
for
you
you.
about that. Yeah, if you
What?
had it.
So what's it called? QuickBooks what?
QuickBooks Self-Employed, and it's super basic. You only categorize from the categories of the Schedule C, and you don't have to do a ton of, it's just personal or business or transfer. There's no
Oh,
other.
excellent. Excellent. Okay, thank you.
And I discovered it because I was digging around in there trying to find something else.
Oh, good for you. That's great information to
Or
know.
no, I found it on an article. I was reading an article about QuickBooks and I saw that that was an option. And I was like, why don't they advertise that?
Yeah, you know why they don't.
So it's half the price. So thank you.
Good, good. Thank you for sharing that. That's excellent.
Mhm.
Okay, just a little bit about sales and use tax. If you sell a physical product, flowers, candles, herbs, cookies, anything like that, there are sales tax requirements. 6% sales tax has to be collected and remitted periodically to the Vermont Department of Taxes. And I say periodically because they will tell you how often, depending on the size of your business and the estimated sales tax that you collect. They will tell you whether it has to be monthly or you qualify for a quarterly filing. I helped the client get set up. He had gotten himself in a big jam, was way behind. And we worked with somebody at the Department of Taxes. They were great to work with, very helpful, walked us through the process. They have an online tool that you open your own account. If you have to file sales tax, you have to obtain a sales tax ID number from the state. And just look into it. Don't shy away from it. Like I said, they're very helpful. If you think you're in arrears, you haven't done this and you should have, they'll help you catch up. They'll set up a payment plan. It's not very onerous. Also be aware that there are now more and more towns and cities, Burlington, I think, South Burlington and Winooski being a few, maybe Rutland, they all require an additional 1%. So if you're selling products in those cities, be aware of that, then you'd have to collect 7%. You can remit it through the same state site that I was just talking about. They have a drop-down button where you pick the additional cities that are owed. And very important that you add this 6 or 7% to your prices, so that when you're charging customers, you collect it. Because if you didn't or you don't, that's coming out of your pocket. And when you do collect it, make sure you set it aside so that when you do have to remit it, the money is there. Don't allow yourself, oh, well, I'm just going to use it. I'll deal with it later. That deal with it later thing will always come back to bite you.
I have a question about sales tax. I'm mostly a wholesale company, so I only have to pay sales and use tax on the retail sales, right? I separate the two out.
Correct.
Because the stores that buy my stuff, then I think they charge the tax.
That's correct.
Okay, and then my other question is my website doesn't let me do tax because it's like a really basic website. So should I just include in my prices a little bit more in my head for tax? Because it doesn't, there's nowhere I can, like, unless I upgrade my website to a fancy
Yeah,
web.
that's a good idea. And you may just put a little footnote in there if you can, that, you know, includes tax, use sales tax or something, just so
Okay,
people know.
that's a great idea. I'll do that because otherwise
Yep.
people are going to be like, why is she charging that much money? And then I'll just put sales tax
Yep.
included. Thank
Yep.
you.
That's a good idea.
John, what if your product isn't physical?
I'm sorry?
What if your product isn't physical? Like I have two parts. I mean, any painting I would sell would be a physical product, so I'd have to pay sales tax on that. But what
Correct.
about like when I do those gallery shows, like I'm not selling a physical product.
Yeah,
I
so,
mean, they're buying space to be in the show.
yeah, that's not sales tax. That's a service, more or less.
That do I need to set up like two separate tax IDs? Like, you know,
No,
with
you'll need one sales tax ID.
so I only need that for when I sell my personal stuff,
Right.
and then I just do that through the Vermont Department of
Right.
Taxes.
Right. Yeah.
Okay.
And do you have an EIN as well? You probably do.
No,
right?
I just did my social security. And I guess
Okay.
I think that's fine as a sole proprietor, right?
It is. It
And
is.
it's under my name and my social security. Okay.
That's fine. Yep.
Okay.
Just a comment about EIN, which is an employee ID number that's issued by the IRS. Some banks will require you to have an EIN before they'll open a business account for you. If you need an EIN, but remember, your 1040 is filed under your social security number. So typically you don't need an EIN. If you're required to get one, or you want to get one, you can. They're available at no charge from the IRS. It takes you about 5 minutes to obtain one. Don't fall for somebody saying, oh, well, we'll help you get, you know, an EIN number and charge you. You shouldn't pay anybody to obtain that EIN. You can get it yourself for free in a matter of minutes. Just want to emphasize that.
So for somebody in their case where they don't have an EIN, they're not registered as a single member LLC, are they like, so you have just decided to do business and are doing it that way through your personal social security number, or are you like, do you have a fictitious business name? Like, is it necessary? Can you just like do it as she's doing it, or
Yes, that you
do you?
can. Yep, you don't need an EI. You can do it as a sole proprietor, doing business as under name or single member LLC. You can use your social security number.
Okay.
Remember, you are the reporting entity, not your business.
John, if I'm buying materials and marking them up to sell to clients for projects, but I'm paying sales tax on from my suppliers, then I just charge sales tax on the markup, or how does that look?
So if you're paying sales tax to the supplier and then passing that cost on to your customers, you're simply, that's simply part of your revenue.
I know,
But-
but what if I mark up the material?
Fine. No, you don't charge your customers sales tax on on that markup.
Okay.
No, you're not, you've already paid it to the supplier.
Okay.
Okay?
Can I ask 2 more questions?
Yep.
One is about the sales, you obtain a tax ID. So sometimes I buy materials for wholesale and that I resell. So do I have to get the tax ID number from this website that I put on those form? Like, I think it's called a resale certificate. There's a form I have to fill out when I buy like envelopes or something.
Yeah.
So I don't pay tax. That's what it is. So I don't pay taxes when I buy the envelopes because then they're going to be sold and taxes charged. Am I getting that right? I haven't done it, but I'm realizing I need to start doing this.
Yeah, if you sell the envelopes in Vermont, how much do you receive for those envelopes?
Well, I would put them with a card. So the cards are like
Oh, I see. Yeah.
$3.50 or $4.
So that's part of your, well, the envelopes will be part of your cost of goods sold, but then you have a price for the card with the envelope. And yeah, so you would be charged, probably should be charging sales tax for the card.
Oh,
For the-
but if it's wholesale, it's just $2 for a store to buy.
Oh, but you're selling these wholesale to stores?
Yes, that's most of my business. That's 95% of it.
Oh, okay. Yeah, so there's no sales tax that you report for that.
Right. And so when I buy materials for cost of goods, I'm wondering if I don't pay taxes when I buy the materials. That's what.
Oh, I see what you're saying. I'm not sure. I will have to say, I really don't know.
Okay. And then the
Okay.
other question was about EIN numbers. When I
Yeah.
started a business a long time ago, I got an EIN number because I don't like to use my social security number anywhere.
Yeah.
And then I recently applied for a sales and use tax and found out that my EIN number goes to a different business, not the business that I thought. Do I even need that EIN number? Because you said it's for employment identification.
Why are you killing me?
You don't need it, but if you want, you can get another one.
Oh, you can. Okay, so I
Yeah.
can use it even though I don't have employees because I just feel weird using my social security.
That's correct. That's just that EIN number. Yeah, the acronym is Employee Identification Number, but it's used for lots of people who don't have any employees as well.
Okay, so I just get a new one.
Yep.
And okay, instead of my social security number. Okay, thank
Yep.
you.
Yep, you're welcome. Okay, just a couple of resources that you can use for tax preparation or just general business research. Top of the list, www.irs.gov. They have just tremendous amounts of information there. Forms, and most of it's relatively easy to understand. So if you wanted to go in and read about Schedule C, there's a whole book, there's a line by line document that explains each line. Now, the problem with the IRS stuff is that they tend to say, well, if this, then that, and then go to this form. And so you find yourself maybe jumping around a little, but don't let that frustrate you. There's lots of good stuff there, and they have some tax estimation tools available to you. They have the reporting and payment tools. You should open an account if you haven't. Similarly, Vermont Department of Taxes and I should have added here the Secretary of State website the gentleman who asked earlier about how do you start a business, there's lots of good business startup information there, in addition to talking to me if you'd like to. But that's a good place to do some poking around. The Small Business Association I should have had on this slide. They too have lots of information. As far as taxes are concerned, TurboTax, you can look at their website. They have a lot of free stuff that's available. H&R Block does as well. And sometimes if you just have a question about a particular tax topic, if you just Google it, it's amazing how much information pops up. I would only caution you, don't believe every single thing you read. Just check the sources carefully, make sure they're reputable and legitimate. And what's often good is to cross-reference several sources if you're searching on a particular topic, and make sure that you're receiving the same information from 2 or 3 places. So that's a good way of just checking on some of these things that we've talked about today too. As far as help preparing your taxes, the TurboTax, if you're so inclined to do it yourself, they have a great tool. The tool that you buy is probably better than the free tool. I've never used a free tool. I personally use TurboTax Deluxe. Used it for years. Works fabulously well. H&R Block, I think, has a tool. You can always contact a local accountant. And sometimes that's if you're not inclined to doing this stuff yourself, then don't. But get somebody to help you that you like and you work with regularly and you feel you're getting good value for. Lots of people around to help. At CVOEO, we have the Volunteer Income Tax Assistance Program. So if your income is below a certain threshold and you're a CVOEO client, you qualify for this program, assuming you're filing a 1040. So even though you're doing a Schedule C, that's part of the 1040. The woman who was asking me about the partnership, VITA would not assist with doing a partnership tax return, but they will with the 1040 and the Schedule C. So those are just a few of the resources available. And the last thing I wanted to touch on quickly, and this is potentially its own little rat hole. In particular, I'm glad I had it here because I was asked about the 1099 income. This topic about employee versus subcontractor, if you have at any point in time, you think you're going to be adding employees to your business, be very careful about paying them as 1099s or as subcontractors. The IRS and the state have very strict rules about how you classify an employee. And what many employers do, and if you're the recipient of a 1099, make sure that you are not one of these. Employers technically really scam employees by giving them 1099s rather than making them employees. And they avoid paying their share of FICA tax, among other things. The general rule of thumb is that if the employer is the one that's controlling the customer, the one who's controlling the work, dictating the work, then the person responding is an employee and not a 1099. So if you have a housekeeping business, for example, and you have a customer and you have more work than you can handle, and you call your best friend and you say, hey, come work for me. I'll put you on a 1099 as a housekeeper. That is wrong. You may do it. I mean, you can do it and you probably won't get in trouble, but by the strict standards of the IRS and the state, that's wrong. That person is an employee and should be treated as such. And I would only add that adding an employee is not the onerous task that you might think it is. For a very low cost, maybe as little as $10, $15 a month, you can hire a payroll service that takes care of all those reporting requirements. It'll cost you more money because you have to pay 7.5% of that person's FICA contribution, but that's really all it costs you, plus the monthly fee to the payroll. So I just want to share that. I have this conversation with a lot of people, and it always disturbs me that these rules get floundered, because in the end, the people getting hurt are the people doing the work. Any questions about that or thoughts?
I have a question. I have some friends that might start filling orders for me, and they'll get a percentage of each order they fill because they will call the stores and for restocking and do everything. They have their own inventory. Would that be an employee? Because they basically get a percentage of each order, but they have to do it all themselves.
Okay. And do you tell them what to do and how to do it? And are you the one who secures the customer?
I am. I go and get the customer initially, and then they take over. This is what we've been talking about. They'll be taking over from there if we go ahead with this. And I thought, I wasn't sure what that would be considered because I don't pay them an hourly amount, and they basically call the store. Like, I kind of wanted them to be motivated on their own to make money. So I was leaving it to them.
Okay. Oh, that's interesting. Yeah.
I know, it's kind of right in the middle. I wasn't sure.
Yeah.
I'm like the marketing department, I'm the one that gets the stores. I'm the designer, but then they're the ones filling orders when they want to call stores.
Okay. And
We have a computer program which says will alert them when, or me, it'll alert any of us about when a store might need to be called.
And are they dealing with the customer under your business name or their own?
That was what we weren't sure. So should they have, because we're just talking about it.
Yeah.
So
Well,
if they,
that sounds like
kind of an order fulfillment center, I guess, would be.
Yeah.
Like Amazon has order fulfillment. I don't
Yeah.
understand all that. It's complex.
Yeah, I think it might be worth looking into a little more. It sounds to me like a 1099 might be okay in this case. The analogy I always like to use that helps clarify it is, if you ever worked with a house builder and you worked with a contractor, and the contractor owns the framers and you paid, but the contractor he does framing, and maybe he does the estimation, but he doesn't know how to do any plumbing. He doesn't know how to do any wiring. He might have some superficial knowledge about those things, but then he goes and hires the plumber and the wiring guy and the painter. Those are true subcontractors because they work under their own independent names in an unrelated field. Joe the electrician works for himself and has other customers that he works for, provides service to. That's a true subcontractor.
Okay, so if I hired an order fulfillment center with their own business, that would be a subcontractor.
I would think so, yes.
So maybe I'll ask my friend, do you want to start your own business and do this? I don't know. Well, I'll have to think about it.
Yeah.
It's a gray area.
Yeah. Do a little more research, and just be careful though, because if you intend to be big and noticeable, you don't want to attract attention if you've done it wrong.
Okay, thanks.
Okay.
Yeah.
All right. Well, that's all I have, and we're right at a little over 90 minutes. So I hope this was helpful to people and you feel like you've learned something today. I did. I learned about QuickBooks Self-Employed. That was my big learning. Any questions, comments, or are we all set?